John, what's the significance of this?
So they were set to meet today, and I guess that has occurred already. The board and the chairman, they had a couple of options. There was the option of a cash special dividend, which seemed relatively unlikely. There was the option of issuing shares in Evergrande to shareholders. That seemed relatively unlikely. What a lot of investors have been hoping for, potentially, was that Evergrande would give out shares in some of its listed subsidiaries to shareholders of Evergrande, the main company. So that includes the new energy vehicle subsidiary that's listed in Hong Kong, includes its property management company that's listed in Hong Kong. And so there was this opportunity for investors to get a share of that business. And also, if Evergrande were able to reduce its ownership in those subsidiaries, it could have removed some of the debts associated with those companies from its own balance sheet, thereby making itself look a little bit stronger.
And of course, S&P Global Ratings cutting Evergrande's rating by 2 notches. This is the third type of move by a ratings company in about a month.
That's right. I mean, if we've seen anything, it's time does not seem to be on Evergrande's side at the moment. They've had problems with disputes with an onshore creditor who asked a court to freeze about 132 million yuan in deposits that Evergrande had. While that seemed to have been resolved, then we had the situation with the banks in Hong Kong deciding not to lend mortgages to buyers of properties that Evergrande had not yet finished. And so it just seems to be one thing after the other. And obviously S&P in its notice said the ability of the company to pay off that debt seems to be reduced.
John, analysts keep saying that Evergrande needs to accelerate asset sales. What sources of funding does it have available right now?
So one thing they're trying to do is they're trying to list their tourism business as well as their bottled water business. And so if they can actually get those deals done, you could see a way for them to raise a substantial amount of cash that they could use to pay off some of this debt. The company is, at the same time, trying to sell as much property as it can, and it has been doing that at a reduced rate. And, cash has been coming in. But as S&P cited, one of the side effects of this, by discounting, their margins are suffering. And so that again, is also causing some questions about how strong financially Evergrande is.